What's going on? Alex here, and today I'm answering your tax questions from YouTube. Not even Reddit today, on YouTube. So here we go. All right, this question comes from Irina, and she says, "Hi Alex, I'm a #1 fan of your channel. Stop it, you're going to make me blush." The question is, this year I switched from a full-time employee to a freelancer, Form 1099. I never worked as a freelancer before. What is the difference between a 1099 and W-2 in terms of filing taxes? What can I write off as a 1099 that I could not write off as a full-time employee? Any additional tips on that topic? The differences are pretty dramatic between being an employee and being a 1099 or a contractor or a self-employed individual, whatever you want to call it. And just to be clear here, we're referring to Form 1099. Typically, self-employed individuals get Forms 1099 miscellaneous issued to them. On the other hand, you have Form W-2, which is basically being an employee or working for another company and receiving salary, wages, and that sort of thing. Now, in terms of being a W-2 employee, there are some downsides from a tax perspective, being the fact that you are paying taxes on your gross wages for the most part as an employee, whereas on the business side, when you're self-employed, you're able to have income, deduct your business expenses, and then pay taxes on the net. There are some other considerations, of course, as a self-employed individual, you're subject to self-employment taxes, but with that said, you are still taxed on the net on the self-employment side, whereas when you're an employee, for the most part, you get taxed on the gross income minus some deductions that you get, like healthcare premiums and so forth. But that's one major difference that you need to take into account. So when you're a W-2 employee, there are limitations in place in terms of deducting any applicable expenses. Now, before the Tax Cuts and Jobs Act, which was enacted as of tax year 2018, there was a concept at the federal level called Unreimbursed employee expenses. Now, that was a deduction taken on Schedule A. So we can take a look here. And this is the Schedule A from tax year 2017. So we're getting to see what this deduction looked like before the Tax Cuts and Jobs Act was in place. And we could see that on line 21, there were unreimbursed employee expenses. So job travel, union dues, job education, etc. So if there were some expenses subject to a few different rules, but in general, if you were an employee and you had unreimbursed expenses that your employer required you to pay, then you could possibly take a deduction on Schedule A of your income tax returns. Now, a few stipulations here. These deductions were subject to what's known as 2% floor in terms of miscellaneous itemized deductions. So that's why you see here this 2% amount. So essentially, it was taking 2% of your AGI as the floor. So let's say your AGI or adjusted gross income was $100,000. This floor was $2,000, being that it's 2% of $100,000. Now, with that said, your total miscellaneous itemized deductions needed to add up to more than $2,000 for you to get any sort of tax benefit. So this number had to be pretty significant to actually move the needle in terms of tax liability. On top of that, you also had to itemize in general. So you had to use Schedule A, because if you were using the standard deduction, then the unreimbursed employee expenses would make no difference on your taxes because you're not filing Schedule A, you're not itemizing, and those miscellaneous itemized deductions have no effect on your return whatsoever. So there were a few different hurdles there, but there were individuals out there with significant unreimbursed employee expenses, and they were able to get some tax benefit from that prior to the Tax Cuts and Jobs Act. Now, in tax year 2018, things changed, and this is what the Schedule A looks like in tax year 2018. So if we scroll down to that same area, we see that the unreimbursed employee expenses are no longer there. Reason being is because the Tax Cuts and Jobs Act eliminated that deduction at the federal level. Now, some states may still allow it, but at the federal level, at least until 2026, when the Tax Cuts and Jobs Act provisions are set to sunset, this is the situation. So essentially, at the federal level, as an employee, even if you pay unreimbursed employee expenses out of pocket, you get zero tax benefit. Not all that attractive. So on the W-2 side, expense deductions very much limited, and you're paying, for the most part, taxes on your gross income. Now, I know there's exemptions like medical premiums, your 401k contributions, and all that, but we're just, in general, considering the fact that when you have W-2 wages, you're taxed on the gross, and then your expenses don't really give you all that much benefit. Let's talk about the other side of things, being self-employed individuals. If you're self-employed and you don't have an entity such as an S corporation or a C corporation in place, you're just working on your own without a business structure in place, then you'd be dealing with Schedule C. All right, and this is a schedule that's part of Form 1040, so they work in tandem. And quite simply, this form is profit or loss from business for a sole proprietorship. And a sole proprietorship is when you just hang out a shingle on your own, no business entities, just you working either with your Social Security number or with an EIN or an employer identification number. It just gives you a little bit more privacy in terms of needing to hand out your Social Security number all over town. You can use an EIN if you want. You can also use a DBA, or doing business as. You'd still be a sole proprietorship, but instead of doing business as Irina so-and-so, you can do business as Irina's Bakery or Irina's graphic design shop, whatever you do. You can have a little bit more customization in terms of that, but you'd still be a sole proprietorship even if you're not doing business under your own name. Just make sure the DBA is properly filed. So, the benefit of Schedule C, for the most part, is the fact that you have these business expenses that you can use to offset the business income to reduce the amount that's going to be subject to income taxes and self-employment taxes. Self-employment taxes being Medicare and Social Security. So you're paying both the employer portion and the employee portion as a self-employed individual. And I have other videos where I've delved into what self-employment tax looks like, how it's calculated, and so forth. So I'm not going to do it too much here. But at the end of the day, just know that these expenses help reduce the amount which is subject to both income taxes and self-employment taxes. So let's take a look. We have advertising here on line 8. So if you're marketing, you're putting out flyers, you're purchasing ads on Facebook, on Google, things like that, that would generally fall into the advertising area. Similarly, if you're sending out any sort of pamphlets, mailers, you're getting posters made up, things like that, that would all generally fall in that category. And certainly, if you're using it to further your business, generally that would be deductible and allow you to offset some of that income. Now, of course, we're assuming that this is an ongoing activity that you do continuously with a profit motive. So there's definitely that aspect to it before we even get to deducting any sort of expenses. So we're assuming that is the case and that this is a bona fide business activity that you're engaged in for profit. Aside from that, car and truck expenses. So if you're driving back and forth, you're meeting clients, you're going to functions, you're visiting different client locations, that's perfectly fine as well. Make sure you track your mileage, but that can also create a deduction, and you may even get some depreciation on the vehicle that you're using, depending on how that's structured. The vehicle and car expenses can get kind of convoluted, but just know that if you track your mileage accordingly, there may very well be some deduction available. Now, what do I mean when I say track mileage? The tax laws are written in a way that they require substantiation for deductions, and if you keep a mileage log, that's going to essentially include the starting mileage, ending mileage, the reason for the trip, the different addresses that you began the trip and you ended the trip. That's going to help substantiate those mileage deductions. And there's too many taxpayers out there that completely forget about mileage logs. And when we ask them, hey, do you have supporting documentation? Their face goes blank and they don't know what to say. So certainly from day one, make sure you track your mileage. Make sure you know whether each mile driven was for business or for personal purposes, and know those amounts at the end of the year. There's actually some apps available. I'm not affiliated with this app whatsoever. It's owned by Microsoft, but it's called MileIQ, and I've used it in the past, and it tracks, sounds kind of creepy, but it tracks all your trips that you make, and then you can either swipe left for, I believe it's a business trip, swipe right if it's a personal trip, and that's going to allow you to classify all those different trips so you don't have to figure it out at the end of the year where you're trying to put together your tax return. So very helpful, and that's another deduction that's available. Commissions and fees. So if you're paying salespeople to help further your business, to bring in clients, and you're paying out commissions and any sort of compensation in that respect, that's another deduction that may possibly be available, would fall into that category. Similarly, if you have independent contractors that are working for you, for your business, and they're helping you facilitate whatever it is that you're doing, that could be classified as contract labor, and that is yet another deduction. Make sure you issue them Forms 1099 as well if you pay them above the $600 threshold. All right, so depletion, not very common, so I'm not going to touch on that, at least for my clients. Depreciation, Section 179 expense can be a whole college course in and of itself, but really what it comes down to is if you're using assets for your business, let's say you purchase a brand new computer, 100% for business purposes, there very well may be a deduction available that you can write it off all in 1 year, or you can choose to write off some of it and then depreciate the rest of it over time. So there's some flexibility there. And much of the equipment that you purchase for your business may be depreciated in general over 5 years. So if you feel that your income is going to increase in future tax years, you may not want to accelerate the depreciation on that. You may want to take it over time. That's yet another deduction. Notice this one's a non-cash deduction. So you're not really shelling out cash in every year for depreciation, but yet it's creating a tax benefit for you. Employee benefit programs, if you have employees that are working for your business and you have benefit programs for them, those costs can fall into this category and can also create a deduction, offset some of that self-employment income. Now, if you have insurance that you're paying, this could be business liability insurance, all sorts of professional liability insurance, things of that nature would fall under this category. Now, you'll see it says other than health. Reason being is that self-employed healthcare premiums are an adjustment to arrive at AGI. Whoa, what am I talking about? Let's get a bit of an idea of what that is. All right, so here on Schedule 1 of Form 1040 for 2019, we see that there's a deduction, which is an adjustment to income, and it's called self-employed health insurance deduction. That's why on Schedule C, it says that you want to leave out your health insurance because you can deduct that in a different place. And while it doesn't offset self-employment income, it does reduce the both AGI and income taxes that you're going to be paying. So certainly good distinction there to keep in mind in terms of separating your healthcare insurance premiums from all the other insurance premiums because they're deducted in different places when you're self-employed. Interest, so if you took loans for your business, that's where you deduct the interest. Make sure that if there's mixed use of the loan proceeds that you allocate for that accordingly, and I can work with the CPA on this if that's the case. But in general, if you have interest for a loan that was used for business purposes, there very well may be a deduction there available as well. Legal and professional services. All right, so if you engaged a lawyer, an accountant, bookkeepers, things like that to help pull all the numbers together for your business or do some legal analysis, things like that, you can also deduct those expenses as well, assuming they're ordinary and necessary. Office expenses, that's where you put in sort of general expenses that are applicable to maintaining a professional office. So, pension and profit sharing plans. So if you have employees and you're paying amounts for their benefit in terms of retirement contributions, things like that, if there's employer matching for those pension plans, that's where you'd include that. Renting or leasing. So if you're renting some sort of property, let's say you're renting an office, you're renting a storage space, things like that, those costs may very well be deductible depending on how things are structured. And repairs and maintenance. If you have equipment that you're having repairs done to, then you may be able to deduct some of those costs as well. Supplies, pretty self-explanatory. Then you got taxes and licenses, utilities, deductible meals. Now, it used to be that meals and entertainment were deductible. With the Tax Cuts and Jobs Act, it cut it down to only the meal. So entertainment for business purposes no longer deductible at the federal level. And finally, we have other expenses from line 48. So if you go to line 48, you'll see that you're able to itemize expenses. So if you have deductions that don't fall into a particular category back up there on Schedule C, you can use this other expenses area to detail those out. And sometimes we use this area to add a little bit more detail to particular expense items and to differentiate different expenses in a bit more granular fashion than Schedule C allows for. So sometimes we can have a good amount of expenses listed here, and we just want to make sure that we're grouping them accordingly. We don't want to have supplies up there on Schedule C, then some more supplies over here, then some 3 line items that are some variation of office expenses. That looks messy. Doesn't look good. So similar items, you want to condense them as much as possible, but you also don't want it to lack the detail necessary for a third party to understand what's going on, right? And that is essentially the crux of the Schedule C form. And this is where a lot of the tax benefits come in from being self-employed, because a lot of these expenses you cannot deduct as an employee. They create no tax benefits. So definitely a lot of good detail is right on this form. But beyond that, understanding the various depreciation allowances, be it depreciating under what's known as MACRS or Modified Accelerated Cost Recovery System, or bonus depreciation, Section 179, there's de minimis safe harbor. There's all sorts of depreciation deductions because companies and lobbyists are always fighting with the government to try to get more benefit in this area, because this is a non-cash expense that can save potentially billions of dollars in any particular year in terms of tax liability. So Congress and lobbyists and private enterprise, they fight like cats and dogs over this stuff to make sure they can get the maximum possible benefit. So these rules change a lot. But understanding them as a business owner is extremely important in terms of planning and also understanding what's going on your tax returns. Hopefully, this adds a little bit of color in terms of Schedule C and the differences between being a W-2 employee and receiving 1099s, because generally you would include your gross receipts on line 1 here. But keep in mind that if you made, in actuality, $350,000 in a particular tax year, but you only got 1099s for $100,000, you want to make sure that you include the $350,000 on line 1 as income, because sometimes 1099s are lost, they're incorrect, they're not issued. So don't necessarily go by the 1099s, but a situation you definitely want to avoid is if your 1099s are issued in the amount of $300,000, you only report $100,000 for some reason here on Schedule C. That's going to lead to a bad time. Aside from all of that, certainly understanding what is inventory, what isn't inventory, what ending inventory is, cost of goods sold as a business owner is crucial if you have some sort of products that you're selling, because there can be a whole list of challenges in that area all by itself. And finally, if you have a home office, make sure that you understand the rules applicable to deducting home office expenses. There are quite a number of them. There's a few different approaches. So if you plan on working from home, definitely you want to make sure you have all the check boxes checked off nicely so that you can put the deduction on the return with confidence and avoid any issues moving forward. All right, let's make sure that we answered all the questions. What's the difference between a 1099 W-2? Definitely covered that. What can I write off as a 1099 that I can't write off as a full-time employee? Covered that. Any additional tips on that topic? Just do what you can to take over the world, all right? Because when your income amount on Schedule C is $20 million a year, that solves a lot of problems in and of itself. Am I right? All right. So if this video created value for you, if you enjoyed it, feel free to comment, like, subscribe, share the video, leave comments. I love reading your comments, and now I'm going to start answering them in videos as well. So your question may be featured in a future video. With that said, hopefully this was helpful. Thanks for watching.